Terry, just wanted to ask about the importance of the self-managed super fund. I know a lot of people in the Shire, including myself, have those. So I just wondered if you could shed some light on self-managed super funds and why you think they're important for business owners.
That's an interesting question because there's a lot of conflict going on in the industry, especially around ASIC and APRA at the moment. Unless you have $500,000 available in your superannuation, ASIC is saying you shouldn't start a self-managed super fund. So they originally said $1 million. But the advantage of SMSF it gives you flexibility. You can actually buy your own business premises, as I said. You can buy your own business premises in the self-managed super fund and use it. You can make all your own investment decisions. But one of my clients once said to me, if he started a self-managed super fund, it would be a self-mismanaged super fund. So it's certainly not for everyone. If you don't have the time or the interest in making investment decisions, you would never start one. But we have quite a few funds that we've been building up over the years. We really got a spike on in 2007 when the government changed the rules for super funds being able to borrow money, and that was the big spike. That we have a lot of funds invest in residential and commercial property. So Mark, it comes down to your investment decisions and what you want to achieve in your long-term plans. Good question.
So this is a question for Michael, but all of you can jump in. How often does the business owners should review their business plans?
Okay, look, it does depend on the business. The smaller the business, probably at least 6 monthly. A bigger business should be doing it monthly.
What should you be looking for, in terms of your reviewing? What should you actually be looking at? What should you be looking for?
All right, well, obviously, if you look at your performance, you're going to see something that's not working right for you. So you pick that out and you do, and I tell you that the checklist I gave you there now is probably about a fifth of what the actual checklist for even a small business is. So you pick it out. If it's having trouble with your accounts receivable, you're getting 90 days instead of your usual 30 days, 60 days, there is things you can do. You have a look at your the cash flow, how it is working for you. Now, if you need to do the to increase it, you do some strategies then to be able to follow up your debtors and find out, all right, look, you're on 30-day terms, we'll extend you to 35, however, we'll stop if you don't pay us within 35 days. A lot of people are scared to do this because they think they will lose the client. They won't lose the client if they service them well. But that's what you do. You pick up bits and pieces where you think there are issues, and believe me, there's a checklist for each of your business functions that you can check.
Can I add to that? I think Michael's actually moved into a lot of operational areas like the debtors collections, policies, etc. I think you need to be careful in business plans because if they're too thick, they're actually very good for lifting the computer screen up so you can get dead level eye on it. So just make sure if when you're preparing business plans, they're sharp to the point. And that's why we work with our clients to develop the budget, the profit plan, cash flow plan, and KPIs, because that then you get your KPIs, Michael, then that tells you where you need to be in your business. All the others, you can move into your operational checklist in terms of stock turnover, debtors collection. So just make that business plan really sharp and make it prepared for you and not for the bank, because banks, sorry guys, do love to see waffle in business plans, but you don't need all that waffle because you understand your business, so just make it sharp for where you want to go in your business.
Can you please talk a bit about the current business lending? Because we all have heard whispers around that banks don't want to lend to small businesses. Can you talk a bit about that?
Sure. So banks do want to lend. They're here to support small businesses, but they just don't want to also put businesses into financial stress. So a lot of times there is a lot of financial analysis that we need to actually go through. But if you have a good plan, a good budgeting, etc., it should make it actually easier for the bank. Because a lot of times, sometimes tax returns, etc., don't tell the full picture. So it's really a matter of the small businesses or the businesses knowing their business and coming forward and telling us their story or telling us about their business. So as long as we understand the actual business, you'll find it easier with your banker. And it's so true, you do really need to form that business relationship with your bank, because that's so important these days, because a lot of people don't want to approach banks, but if you know your business, it'll be much easier. And if you form that relationship and they know your business, it'll be much easier for lending.
Sorry, I've got the mic, so I'll ask a question. Claire, I'll ask you a question, please. If you look at where we are now with the lowest interest rate environment we've ever experienced and compare this to 10 years ago, are there any stark differences to how your bank or any bank that you see as approaching business lending compared to 10 years ago?
Okay, so I mean, our rates have been the lowest, I guess. Going back 10 years ago, I remember the rates were quite high, even going further back. I guess the banks are now highly regulated in how we approve loans, how we look at loans. Previously it was just a handshake and you say, yep, just sign on this, not even a signature, just a handshake would have done the deal. But with all the regulations that have come up, the banks do work differently today. But again, you've got to really have that strong relationship with your banker to actually be able to put forward what's happening in your business, because things can change. Last year you may have a great year, and this year may not be so great, but again, it could be something that has changed, and the banks would take that in consideration.
To the panel, one advice you will give to a customer when they approach you and they say, look, I've been very busy, I've been running the business for a few years, but I don't see money in my bank account.
That's a really good question. When we tell you you had a great year, you had a profit of $100,000, and you go, where is it? I don't see it. I actually look at the shareholder loan account. And when you do analysis of that, you find out they're actually taking more out of the business than what they made. And the unfortunate part of that, they keep doing that, they will get to go and see Darren. He's a very popular boy with me. But to answer your question, we actually do a source and application of funds for some businesses who just don't know where the money is, because they could have gone and bought some equipment and pay cash for it, which I think is quite a silly thing for a small business. You're better off to fund it over the lifetime of the asset. So it's really a matter of analysing the balance sheet to see where the money went.
Yeah, on top of that, of course, it's your collections, again, as we spoke before, and also your stock and inventory. If it's sitting on the shelf... Oh, Paul, I'm so sorry. If it's sitting on your shelf, it's like having cash sitting on your shelf. So a lot of it has a lot to do with that. So number one, margins. Your collections, and number three, your stock has a huge influence whether you make a lot of money or no money.
We're all small businesses, and more often than not, we all hear about when you start a small business or when you're running a small business, you need to have a dream team. I just want to ask each panelist, who do they think should be a part of your dream team to help you grow your business? So we'll start with you.
So your dream team. So, well, accountants are quite important. Bankers, I believe, are very, very important, and the legalities of your business. So, someone in the legal field will be quite important to start it off.
Wow, I love this one. You got another half an hour for me to talk? I've noticed a trait amongst successful business owners. First of all, they start off with the strategy and the structure. The very next thing they do is build a dream team. So whoever should be on that dream team in building that business, whether it be finance people, the accountant, the HR people, whatever, they build that and they build the team, then they go out and market their business. But from my business point of view, my dream team is all of my team. We have a fairly decent sized team and people have been with me for 22, 24 years now. And even I got a phone call yesterday from one of my clients, said, "Who's that new girl? Jill answered the phone yesterday." I said, "Well, Jill's only worked with me for 17 years. I suppose she's new." So I'm not sure which way the question was meant to say, but well, you're right. Yeah, then I'll have to be biased and say, make sure you've got a good accountant, you've got a good lawyer, and in the old days, you really need to have your good bank manager, if only you can break through the noise to get to them. And I think really, again, a good network of people, and that's what we have through the chamber here, people that you can walk up and ask questions to.
Gee, thanks, Terry. You left me little. But basically, the dream team starts with your team. If you have a really good employee network who can run your system, if your business has a system, and it must have a system, and above all, know exactly what they're doing. For the support, naturally, your accountant is definitely an important factor, and it is forgotten. I ask a lot of people when I go out consulting and say, how often do you see your accountant? And do you believe, I know, I only see him when I need to. Why? Maybe Terry can ask that question, but I just find that a little bit bizarre because he has your profit and loss, he has your balance sheet, it tells you exactly where to go. So it's very important. And of course, you definitely create a banking relationship because they're really going to end up running your business or destroying your business one way or the other. And, consultant doesn't hurt either.
I just want to add to your point, which is a very valid question. I think in addition to your dream team, it should be part of the local chamber. So the Chamber of Commerce, your local Chamber of Commerce should be part of your dream team. And I think that should be facilitated to the business plan. That template should have, part of that template should have an additional financial planner, accountant, all these sort of things. Recommended, join your local Chamber of Commerce.
Thank you, Wally. Does anybody have any questions? Yep. I'll just ask a final question. We all know, both in banking and compliance spaces, things are changing massively and rapidly. What one advice you can give to make sure that the customers are equipped to march forward and grow their business? So we'll start with you, Claire.
I guess be on top of your business. I mean, as I mentioned before, a lot of business owners are in their business and they're quite good at it. But sometimes you just need to take a step back and really manage your business and just take a step back and just manage it instead of in it.
Well, you keep coming up with the good questions. I'm going to stay true to my presentation. Yes, technology has changed over the last 20 years, but the core parts of my presentation haven't changed. So to keep on top of it, know what your business is, get your right structure in place, have the vision for your business, set the goals, do your profit planning, make sure you're monitoring your KPIs, and whatever the other 5 tips that I have in my presentation.
Okay, banking regulations have changed a lot. So the approach to the bank is so important now. And remember what I said is that they look at you first. If they consider you can't manage your business, then no, you're just going further. So you've got to convince the bank that you really do know what your business is all about. You understand your profit and loss in your balance sheet. It's so important too because a lot of people don't, and yet that runs your business as well. Understand the cash flow in your business. To me, it is so important to make an impression where your bank is concerned.
I guess that winds up our Q&A. I just want to thank again the panelists for coming up, sparing their time. And I think my takeaway from this session today is to go back and complete the checklist and look into your business and make sure that you don't get busy in the day-to-day and just forget about it, enjoy the breakfast. Do something, because it's very important. Small businesses always struggle at every step. So, and we have such distinguished people in Chamber who can offer their help and let your business grow. Thank you.